Assalamualaikum warahmatullahi wabarakatuh. Hello everyone. Welcome to our lesson on auditing short-term liabilities. I'm Yirzal Fendi and I'm from Accounting Study Program. And today in this video we are diving into one of the key areas of financial auditing that keeps business running smoothly. In the short-term liabilities like accounts payable, accrued expense, and short-term loans are the obligation a company must settle within a year. They're crucial because they reflect a company immediate financial health and liquidity. So let's discuss now. So the next slide, there is audit objective and risk assessment for short-term liabilities. The primary objective is to obtain sufficient appropriate evidence that current liability are fairly stated in a material respects. So there is number one completeness, and the second risk of understatement, and number two acceptance, and the next valuation, and the last presentation and disclosure. So the next slide, there is substantive procedure, account payable verification. Number one, forging of subsequent payment. This is examine disbursement made after the year end. If a payment relates to ability incurred before year end, ensure it was included in the year. And the next, confirmation. Send confirmation to vendor, especially those with small or zero balance at year end or major supplier used through the period. And number three, cutoff testing. Review receiving report and vendor invoice immediately before and after the balance sheet that to ensure purchase are recorded in the correct period. The next, a reconciliation. Reconcile the A or P leads to the general ledger control account and review all known moving debit balancing for misclassification. So the next slide, there is substantive procedure, accrued expense, and other liabilities. Accrual, such as accrued payroll, uh, this is as accrued payroll, interest, and tax involve significant estimation and calculation risks. These balance are verified primarily calculation and through recalculation and reasonable testing. Sorry. Uh, there is accrued interest and tax, accrued payroll and benefit, and accrued utility and rent. And recalculate the interest expense and liability based on loan balance and rates. In the accrued payroll and benefit, verify the computation of accrued salaries, bonuses, and vacation pay using company policies and employment contract. And then accrued utilities and rent, examine past consumption patterns, contract, and subsequent bill payment to ensure a reasonable. And then the last conclusion, key takeaways and best practice. A successful audit of short-term liabilities demands skepticism, precision, and uh, yielding focus on the complement assertion. Focus on completeness and verify disclosure and judgment for estimation, and the last leverage analytics. So prioritize the short for unrecorded liabilities, especially through subsequent payment and cutoff procedure. And then second, verify disclosure. This ensure proper classification between current and non-current liabilities and adequate disclosure of contingencies. And judgment for estimation. There is apply professional judgment when evaluating provision and accrued expense. And last, a leverage analytics. Use ratio analysis um, to identify unexpected fluctuation that may signal underlying usage. And that's a wrap on auditing short-term liabilities. We've covered the essential objective, procedure like voting and confirmation, and how to spot the tricky risks that could impact a company financial statement. So if you found this helpful, like, subscribe, and hit the bell for more auditing insight. Drop a comment below what's your biggest challenge with short-term liabilities. Thank you for watching and see you in the next video. Thank you guys. Wassalamualaikum warahmatullahi wabarakatuh.